excited to have him and learn from him today. Ron, the floor is yours.
Thank you, Taylor. So you three need to go sit off to the side somewhere so you can see this.
All right.
I don't want to be talking behind your back, or you talking behind my back. And by the way, just for information purposes, this is our company's tagline, but I'm going to take it off, okay? There we go. That's what I'm trying to get to. So I will give you a little bit more of my background, right? I'm from Idaho originally. I was born on Easter. So this Easter is my 76th birthday. I'm probably older than 90% of you in here. Oh no, I think probably 100% of you. Right?
You've been married longer than I've been alive.
I don't doubt that whatsoever. I was talking to Steve Coombs here, or Nick Coombs, I mean, and he went to school with two of my older children here in Layton. I moved to Layton from Idaho in 1977. I told my wife, I said, I dated all of Idaho. I had to move here just to be able to find somebody that would be willing to date me, right? And she is the youngest of 11. I am the oldest of 9. So I come from a large family, and I was raised milking cows and picking potatoes and hauling hay. That's my life. I like that kind of life. And I'm also an avid hunter. I go elk hunting every year. Even at my age, last year I hiked 5 mountains for 5 days with a 40-pound pack. Didn't see a cotton picking thing. But it was fun anyway, right? Also, one of the things that I'm a firm believer in is you guys. Do you know why I believe in you? Because you're entrepreneurs. You are the lifeblood of this country. I remember when Todd Porter was talking to us a few weeks ago, right? Basically, they said the same thing. There are 5 things I like about entrepreneurs, right? First off, you are planners. You like to plan, right? But you're also unpredictable, right? You jump in, you do things, you like the future, but you take risks, and that is great, but you take planned risks. And you're passionate about what you do. The other things I really like for most entrepreneurs is that I find that most young people, when they start a business of their own, they want to be as good as their father and mother are now. Entrepreneurs are patient. You know it's not going to come all at one time, right? You're patient, and you're persistent. I'm going to tell you the only thing that allows me to have any confidence in talking to you guys today. First off, I've given this same seminar and other seminars all over the United States. I've been doing this for 42 years. I started doing this back in 1982. Bought my first business, my first real business in 1974. Failed miserably because there's so many things I didn't know. And that's what I'm trying to teach others, how to do the same thing. How do you not fail? I've lost more money in my lifetime than most people have ever made in their lifetime. When the market crashed in 2008, heavily invested in real estate, I lost $1.5 million in foreclosed properties because my renters were walking away from us. Couldn't keep it up, okay? Now also to give you a little bit more on my real estate background, I am a firm believer that in any business you get into, do it differently. So my first business I didn't do very, very well at. I was 29 years old, moved to Utah in 77, lived with my sister, had my car repossessed, nothing. Then I met a friend of mine. I was in the Marine Corps, by the way, during the Vietnam War. And after I got out of going into in the Marine Corps, I came home, and 30 days later, I went to Japan as an LDS missionary. I was in Japan for 4 years, 2 years in the military because they never sent me to Vietnam. 2 years in the military and 2 years in Japan. I speak fluent Japanese. I've translated for the LDS church conferences, and I've also translated for several Japanese. I was living in California for a while, and there were several Japanese nationals that were in a federal prison there, and I translated for them. I've got a lot of experience in dealing with different people and things of that nature, and it's a lot of fun. When I finally started going on is I have a friend of mine that I was in the military with, and he was a mortician, and we had an opportunity to buy a piece of real estate. Anybody want to guess what business this was, this real estate? Any idea? Brock, I probably told you. A cemetery. Right? It's a real dead business, I'm telling you, right? Oh, what's wrong? You guys don't like my sense of humor already? Gee, I'm gonna have a tough crowd here, I can tell right now, right? And we bought it, nothing down. Ran it for a year and a half, uploaded it, got everything going so that it was really good. Sold it a year and a half later, made $150,000 on it. On that, okay? From that, I got a job in Salt Lake with a title insurance company as their executive vice president. Ran offices in Utah County and in Salt Lake County. But they started doing things that, to me, didn't treat my clients right. And I voiced it to the president of the company. I got fired. My firm belief is if you're going to do something, do it differently. You don't do it the same way as everybody else. You guys are entrepreneurs. Do it differently. So my next step, I brought the first California-style escrow company into Utah in 1979. Right? Who in here has heard of an all-inclusive trust deed? Avery has. Who else? Anybody else know what an AITD is? Do you know what a wraparound contract is? That's what an all-inclusive trust deed is. An all-inclusive trust deed is a promissory note that you sign with the buyers of the property, and it wraps around all of the liens and encumbrances filed against the property, and you secure that note with a deed of trust that also wraps around everything. It's all inclusive. Okay? Introduce that to Utah. They'd never heard of it before. They had to do laws just to bring things in that we'd introduced and the system that they had. Then Jimmy Carter's, actually I'll show you this here in just a second, right? And we went through that. Let me show you some of those things. I'll see if I can do that right now, okay? So I'm going to just ask you some questions. Why do you buy real estate? What's the reasons? Somebody give me a reason. Now, I'm going to tell you something. I'm not going to lecture. I want you, if you've got questions, to ask the questions, and I'm going to ask you to answer questions. So tell me, somebody, why do you buy real estate? What's that?
Sucks to rent.
It sucks to rent, okay. Is that the only reason? Who else? What?
Great investment. Great investment.
Sorry, I'm a little bit deaf.
Great investment.
Great investment, that's correct, okay. So, it's a good investment. Question is, on your business that you've got right now, can you survive an economic downturn? I've survived 2. Lost my shirt on both of them. Except, I never lost my home, never had anybody sue me, had to start over every time. That's what's good about entrepreneurs, right? This is what I was going to tell you. Back in the 1980s, there was a recession. Jimmy Carter's economic policy just drove the country into the ground. And being an escrow company, we dealt with real estate closings. Back then, we didn't have computers. I had to type up all real estate documents on a typewriter by hand. I couldn't white out, I couldn't erase. If it wasn't correct, we started all over again, okay? So we started this, and then because of the economy, interest went up to 21%. We couldn't do anything. So a group of our, now am I standing in front of you guys? Can you see this okay?
Yeah, you're good.
Okay. A group of my clients put some money together and started sending me around different locations, most of the United States and some out of country areas, to find money that they could get into real estate with. While I was gone, our corporate treasurer embezzled $150,000 of trust funds, right? And the state doesn't say, who's at fault, we'll figure it out. They say, you're out of business, now let's figure it out. And when I did that, Mike Nider happened to be my attorney. He was a very good attorney, just lived right around the corner from us. And he said, Ron, I'm going to show you how to do things where nobody will take anything from you again, including the IRS. But the one thing he taught me was the thing that would make me would lose control. I guess I'm a control freak. I want to be able to do things where I control the outcome. That's why I say own nothing. You don't make money by owning something. Whatever you own can be taken. You make money by controlling it, controlling an asset. That's why you want to make money, okay? Now, in addition to that, how about leaving something for your family? Is that another good idea for being an investment? All right? What about taxes? What about probate? Have you thought about that? If you leave this stuff, what happens to your business if you die? If you died, and Jordan, right? Yeah, I'm sorry, Jordan. I knew your name. I just couldn't get it out of my head. Okay? If you die, what happens to your business?
Nate will take over.
And what happens if Nate takes over and he dies?
His wife, hopefully. I don't know.
So actually, he won't take over without the court intervening, without the state intervening. We want you to set it up in such a way that you never worry about court. You don't worry about probate. It just automatically flows. What's one of the things that a good CEO of a company does? What do you think that the most important thing that the CEO does? In fact, I think it's the most important thing. Any idea? What? That's a good thing. I call it what if. You plan for what if. You don't have to, you're not worried, you're not scared, you just plan. What if this or what if that? You prepare your company for those types of things, right? Now, when you're dealing in business, you've got four walls to a business. You need a good accountant, right? You also need to make sure you've got a good attorney. And one of the things that most people don't realize is you need to have your estate involved. How many of you are working with an estate planner? How many of you have your estate own your business with you? Do you? Good for you. That's unusual. Okay? If you die and you have a trust, not an irrevocable trust, a revocable. Anybody know the difference between the two? What's the difference between an irrevocable trust and a revocable trust? Anybody can tell me? What's that?
You can move entities in and out of a revocable trust. An irrevocable trust is set and done.
And why can you move entities out of there?
I don't know.
Because it's a living trust. You, as the grantor, are in charge, right? As a grantor, you're in charge of that trust. You can do whatever you want to without any implications at all. But do you know the drawback from that one?
No, frankly.
A lawsuit can take everything you own because you're in charge. You can't separate yourself, right? But an irrevocable charge, what it does is it allows you to be in control, but an irrevocable trust is set in stone. You lose control, right? So Mike organized me into an irrevocable trust, which is just fine, but I lost control. At that point, I started studying. I went back for the LDS Church. I worked as a welfare construction auditor for 2 years while I finished my degree. I have a business degree in business administration and a minor in music. Anybody in here like music? So I've sung professionally in Japan and all over the different states, right? Did that for a long time, top voice. But neither here nor there. The point is that I had to have an education. I had to study. I went back to school after I got my degree. It took me 19 years, by the way, to get my college degree, right? But I got it. And it's a good thing to finish. 19 years. But then I went back to school at the American College of Forensic Examiners. I am a forensic auditor. And do you know what I audit? Mortgages. Because there are so many banks and lenders out there that violate RESPA laws. And you don't realize that. I've helped a lot of clients beat the foreclosure. I don't do it anymore, but I've learned. In addition to that, I was a mortgage broker for 10 years. All right, I owned an insurance agency for 12 years, had no agents. I had agents working for me, but I was not a licensed agent. I went to security school so that I learned I could get my 6 and 63 and Series 7 license. Never wanted the license. I've learned everything that CPAs learn. Don't want the license. I can do what they do and more because I'm not licensed, but I'm trained. I have also gone to school with the IRS, and I have a certificate saying that I am a small business tax professional. Owned 2 title insurance companies, and when the mortgage market crashed in 2008, at that time I had started my first accounting firm, and that's when we lost it. I had to shut it down. We had 4 limited liability companies and were heavily invested in real estate. Had to close it, walked away, and I'm going to show you what the trick is when we get through here in just a minute, okay? Now, you are the management, and what we want you to do as managers of your business is to have an ability to access questions, to access things that you may not know, to talk to professionals, but I want to show you how to be able to get the professional help. I want you to have the benefits of the wealthy without having to pay what the wealthy pay for those benefits. What we've built here with Pratt & Lefevre Corporation is specifically for the small business. That's what we started in. We're going to give you what we call a strategic advisor. But you look at these different individuals here, they all look at it from different angles, from different walls. You go to an accountant, he tells you one thing. You go to an attorney, tells you something else, and it's often conflicting. Who do you believe? Right? We've taken all of these professionals and brought them inside so that they see your organization from the same angle. Right? Now, what's the other reason? How about passive income? You guys want passive income? Is that why you're here? Give me the definition of passive income. Those who haven't talked to me before, give me the definition. What is passive income? Mailbox money. Mailbox money, okay? It's money you make while you sleep, right? You don't do anything for it. So do you know that, and I passed this out to you, some of those on the back row didn't get it because I ran out of the forms. There are 23 tax disadvantages for passive income and only 1 advantage. And most people don't know that. Right? You don't want passive income. You want reoccurring income. You want active, materially active income. And you can do this without taking a lot of time to do it, okay? And the way you do it, and I'm going to show you how to do it, is to turn your real estate into a business, not an investment, okay? So what is passive income? Passive income is revenue generated in a way that doesn't involve labor or energy. So quit being damn lazy. Right? Let's start making some real money and do it so that you can reduce your taxes. If you get a distribution from your taxes, how many of you in here have property that has a property manager? Okay? What does your property manager do at the end of the year? What does he send you? 1099? Yeah. Sends you a 1099. Do you know why? Because the IRS says you don't own the business. All the IRS says is that's just an investment. The property manager does all the work. So all you're doing is getting a dividend. Right? That's passive income. What we've done is taken a lot of real estate agents and showed them how to be property managers, but not send you a 1099. They become vendors. They become your employees. As a 1099 employee, at the end of the year, you send them the 1099. And we show real estate investors how to do that all the time. Now, what they say is you have to have be a real estate professional. How many have heard this before? Have to have at least 750 hours actively involved in managing the business. You know what I'm going to say? Nonsense. You don't. What you have to do is make the business or the real estate a business where you're actively involved in it all the time because it's your business. Okay? You don't want to get the 1099. You want to send the 1099. All right, that's passive income. Looks like I startled her so much she dropped the books. Okay, number 4. How about being a business of your own? Anybody know what a hobby business is? Actually, there's no time limit on it. That's something that was made up by CPAs, and it's not in the rules, right? There is an actual case out there where there's a guy that owned a business, very successful, ran the business for many years, decided he wanted to have some cows. So he bought a dairy farm. And every year for 24 years, this dairy farm lost money. So the IRS contacted him and said, "You're not a real business, you're a hobby business. You owe us $90,000. So he paid the $90,000. Then he took the IRS to court. The results of the court said, from the court, IRS, you can't change the rules in the middle of the stream. You're the one that said what is a business, and you made the rules up, and he's doing everything that needs to be done. You can't force a person to make a profit. That's beyond their scope. That's beyond their control. So whether he makes a profit makes absolutely no difference as to whether he's an active business or not. Okay? Made him give the $90,000 back and pay these attorneys. That's the only time I've ever really heard the IRS having to eat that much. Okay? I've dealt with the IRS a long time. Okay?
Hey, quick question for you.
Yes.
So JR, who could not be here, said,
Jared McLaughlin?
yes.
Yeah.
He said to make sure and ask you if you could tell everyone about what happened to your audits, or to his audits.
To his audit?
Yeah, that's, apparently he wants you to share with everybody the story about his audits.
Okay. It isn't his audit, but I can tell you what happened to somebody else's audit, but we'll do that in a bit, okay?
Yeah, that works.
Okay. As far as I know, I've been doing this now since 1982, 42 years, right? I've only had one client audited. And the result of that audit was no changes needed, no money owed. It wasn't JR's audit, it was somebody else's. Okay? But just like we had up there, we believe that you be organized, but you don't want to own anything. Owning things can be taken from you. Okay? Don't be a hobby business. Do you know what they consider a hobby business? Is somebody that does the business at their kitchen table. They're not organized, they're not keeping books. What is it in a business structure, a business organization that keeps you safe? Avery and Tennille, you can't answer that question. Okay? What is it in business that keeps you safe? Riley, you can't answer either. What do you think?
I don't know.
So you've heard of the corporate veil, right? How does the corporate veil protect you, and why does it protect you? I'm going to get these people on the back row involved a little bit. What do you think that what keeps you safe in business? What is the corporate veil? Either one of you can answer, I don't care. She's better looking than you are, so I say contracts. Paperwork? That's close. That's really close. Okay? If you are a single member LLC, how many of you in here are a single member LLC? Okay. How many of you in here are an S Corp? Okay. The thing that keeps you safe, just like she said, is the formalities. It's separating yourself from the business. A hobby business, you cannot separate yourself. Right? You have got to act like a business, independent of yourself. The IRS has what they call related party rules, and we'll go over those a little later on. Okay? So, I forgot I was going to do that right now. Related party rules. Anybody have any idea what they are? Tennille, you have a business, right? Are you related to the business? Yes, you are.
Yes.
Why are you related to the business?
Because I started the business?
Because you're part of it, right? So you're part of the business, and you are you, correct? Those two parties have to be independent and separate, cannot be treated any differently than they treat anybody else on the outside. That's the related party rules. If not, there are things you cannot do in business, and you become a hobby business, okay? It's just like saying, I'm a business, I'm an LLC, but instead of being a trailer, you live in a pup tent. You don't act like the business. So when you act like an LLC, you have to be separate. Single member LLCs cannot separate themselves. You are everything. You are an alter ego by the law, and the IRS doesn't even consider you a business. They consider you a disregarded entity, and they can pierce the veil and take everything you own. And the law's done that. Okay? We want you to act like a trailer and not call yourself a trailer and live in a pup tent. Okay? So number 5, how about becoming wealthy? Is that another reason for being in real estate? How many of you here want to be rich?
All of us.
Not me. I've never wanted to be rich. What I want to do is never have to pay anything again because my business pays for it and I write it off on my taxes. That's my goal. And right now it's happening. Okay? So, Laurel Langemeyer, who wrote a book, in fact, my corporate attorney several years ago came to me and she handed me this book and she said, Ron, you need to read this. And I said, why? I've read hundreds of books. She said, because this lady has been teaching what you've been teaching for 30 years. And back then it was 30 years, right? If you want to be wealthy, you act like the wealthy. What I teach to all of our clients is what the wealthy do. But I just don't do it for you. Our company will teach you what we do, why we do it, and how we do it. Okay? We're going to give you the benefits of the wealthy and not have you pay what the wealthy pay for those benefits. Now, let's talk about safety and protection. We're from Utah. Anybody in here ski? Even at my age, I still go skiing once in a while, right? When I'm on the hill, you don't see me. I've got several layers of clothing on. All you see is what I want you to see. You don't see an inch of skin. You don't have any idea who that is up there, right? You might talk to me, you might hear my voice, but if I go to the coffee shop at the bottom of the hill and get a sandwich or something, take my jacket off, you wouldn't even know it's the same person, right? Now, here's the question that I've got for you. Camden, what if you're a clumsy skier and you bump into a tree and the tree jags a hole right in your jacket? Now all of a sudden, the cold, cruel world is penetrating you. What do you do?
Scream for help.
What's that? Scream for help?
Scream for help.
I'm sure you're self-sufficient. You could probably fix it yourself. Is that what you would do, is fix it?
I mean, it depends on how bad it is, right? Like, did you get impaled?
No. Just rip the hole in your jacket so it doesn't hurt you.
Oh, okay. So it wasn't a back crash. You just get up and mind your jacket when you get home.
And that's the only thing you can do. If you try to patch it up, it's not as good as it used to be, right? It's damaged. So if it were me, as fast as I could get there without freezing my butt off, I'd ski to the bottom of the hill, go to the ski shop, throw the jacket away, put another one in its place, and the only thing I lose is the cost of a new jacket. I can go to the top of the hill and start all over again, right? We want you to do the same thing in business. Organize your business in such a way that you can walk away. When I closed my last accounting firm down in 08, actually it was in October of 07 is when we closed it down, I had 4 limited liability companies, one that entered into joint venture agreements with people that were selling their homes, one that was a property inspector, the other one was just crackerjack salesman of one of my sons. In fact, my oldest one was an attorney, and then my second one was going to college at the time. And my third one just brought in clients. And the fourth one was run by a friend of mine who was a contract mortgage loan processing company. We had to shut all of those down and walk away from it. And then in 08, started Pratt & Lefevre Corporation. Last year was our 16th birthday. I told some of my people last week when I was in a meeting, I said, we finally come of age so I could drive without parental supervision. And he said, don't tell anybody you're a teenager, especially 16, because they don't like 16-year-old attitudes, okay? But we want you to protect yourself, right? So now, we've talked about protection. We've talked about a lot of other things. Let's talk about your personal situation, irrelevant of the real estate you're getting into, right? How does a W-2 employee get paid? Gets a salary, right? How many in here are W-2 besides doing the real estate? How do you pay your taxes?
I have it deducted from my check.
Yeah, you don't even see it, do you? Okay? And then, after you get it deducted, then you got expenses. You got your house payments, you've got rent, you've got gas for your cars, your operations of your cars, you got insurance, you got taxes. Those are fixed expenses you've got to pay. And you hope that after you pay your fixed expenses, you've got enough left over to be able to buy groceries and other things that you want to buy, correct? You realize that, thank you very much. Am I over time? Okay.
10 to 15 minutes.
All right. So you realize that as a W-2 employee, you're giving money to the government every year, interest-free, right? Interest is the most expensive taskmaster. Anybody can tell me what the definition of interest is? What do you think, Nick? Okay, that's close, but that's not the definition I would use. Let me tell you a story. There's a guy by the name of Tom Perry. If you're a member of the LDS Church, you probably knew who he was. Graduated from BYU with a master's in business in the 30s. Went to Boston to get his first job, and he worked for a bank. As he walked in, he was dressed to the hilt. You know, he got a nice black suit and red tie and a white shirt and polished shoes and fresh haircut. Walked in, and the receptionist said, "Welcome, Mr. Perry. The bank president wants to see you before you do anything else." So he goes upstairs. They shake hands, sit down, start talking. In the middle of their conversation, the bank president said, "Tom, give me the definition of interest." Well, he's trying to come up with this book definition to try and show how smart he is because he just got out of school. And the bank president said, "Remember this, interest is to thems who understands it, thems who gets it. Thems who don't understand it, thems who pays it." Understand interest, okay? Now, how does a business pay its income tax? Makes the same amount of money, but it pays the expenses first. And then it pays the taxes after it's paid its expenses, right? Let's take your fixed expenses and turn them into business expenses. Let's take your house payment, your utilities, your automobile expenses, all of them, and make them business expenses. Do that, you can reduce your taxable income by 60 to 70%. Right? You don't even have to show it as income anymore, right? You can pay all of your personal business expenses, not clothes, not groceries, not haircuts, You know, even vacations once in a while you can write off as a business expense if you do it correctly, right? These are the things we want you to turn into them. These are your expenses you've got to pay. Let's legally and ethically turn them into business expenses. Right? Now, before you build your mansion, dream your mansion, but build your log cabin first, right? Start simple. Actually, I want you to tell me something, and I'll probably bring this up later on. I always believe in the KISS principle, K-I-S-S. Anybody have any idea what that means? Yeah, but my wife won't let me call anybody stupid, so I always say, keep it stupidly simple. Dumb it down. Don't make it difficult. When you're in business, and we want you to make your real estate a business, make it easy to start, easy to manage, and if somebody comes after you, easy to walk away without losing your shirt. Okay? And here is the thing that I'm going to suggest for you, personally, with your personal circumstances, irrelevant of your real estate. Okay? The first thing you want to do is to have a C corporation, not an S corp. A C corp. Because a C corp doesn't have to be owned by you. Right? And a C corp can offer you expenses and tax deductions that S corporations and LLCs cannot. But remember the layering effect, right? Who's going to own the C corporation? A family trust. An revocable trust, not an irrevocable trust. And you do that because we don't want the trust to own assets. The only asset it owns is the business. That's it. But now I'm going to also tell you something else. Don't think that you're going to put real estate in a corporation. You don't want to do that. Right? And we'll talk about that in just a second. The business, the corporation is there for several reasons, but most of them is to manage your money. Okay? Then what we want you to do is to have a limited liability company owned by you and your spouse, and if you're not married, by you and your trust. So if you're married, spouses and the trust are the only owners of the LLC. Okay? You and the spouse are the owner, and then you are a sole proprietor that makes money from the LLC after you paid your expenses. Okay? Now, let's talk about what you're going to put into it. Anybody know the difference between these companies here? If you're going to be in business, you need to know why you use a business. What's the reason? Most people form themselves an LLC because they heard that that ought to be the best way to go. Most people are scared of C corporations. I had a guy the other day tell me, he said, I don't want to be a C corporation. I said, why is that? And he said, they won't let me because I have to make at least $300,000. And I said, that's a bunch of BS. You don't even have to make any money in the corporation initially to have a corporation and get the tax benefits. Okay? We want to add the family trust. That's really critical. So don't forget the KISS principle. Make it easy in, easy out. And protect yourself while you're doing it. So let's talk about this, right? You got a cardboard box. Every business, let's just make it an analogy that your business looks like a cardboard box. 4 sides and a bottom. Corporations are self-contained. They have no hole in the bottom. They have nothing. It's just a complete set. So you do your services, money comes in. What's the only legitimate way to get money out of a box, out of your box? What's the only legitimate way to not have any money left in the box? Because if you bring money in and you got money in the bottom of the box, that box pays the taxes, correct? What's the only legitimate way to not pay taxes, to have no money left in the box?
Don't put any in.
What's that?
Don't put any in.
Dump it out?
Don't put any in it.
Well, that's true, but then you wouldn't be making any money, would you? Well, I want you to make money. I want to put lots of money in there, but how do you get the money out without paying taxes on it? Expenses, yeah. Who said that? Yes, exactly right, expenses. Okay? And we'll talk about those in a minute. But now the corporation, if there's money left in the bottom box, the corporation is self-contained, pays its own tax. LLC, on the other hand, has a hole in the bottom, right? So during the tax year, the hole is plugged, money goes in, expenses to take the money out. At the end of the year, you pull the plug because you're the owner, you catch the money, you show that on your income tax, that's self-employment income. That's the one thing CPAs don't want you to do that for, and that's why they recommend you become an S-Corp. That's the only advantage of an S-Corp, is there's no self-employment tax. Even though there's 23 other disadvantages, right? So what we want to do is to take the bottom of the box. What happens when you pay the cash out? What happens to the cash? Do you get to keep it? You don't get to keep it, do you? You lose it. You don't have anything left over. So if you zero out the cash, what are you going to build your business with? Those are the things that we want to change. So corporations are self-contained. They pay the tax. Sole proprietors, S-Corps, LLCs, partnerships, you pay the tax. And what we want you to do is to do this, keep the money and not pay the tax. And how do you do that? Okay? So you're going to have a corporation, and we want you to have a corporation and an LLC together, correct? Corporations are not pass-through. They pay their own tax. A limited liability is pass-through, but if it's makes a profit, you pay the tax on it. So how do you avoid that? And how do you avoid that within IRS rules? It's just like the JR wanted me to say, how do you do that and not have to be audited? And I cannot guarantee you that you won't get audited. But in 42 years, I personally have never been audited. I've got one client in Tooele last year that got audited for the first time in 42 years. And after seeing what we had done and the paperwork, remember, it's the paperwork, it's the contracts that keep this working. Abide by the contracts. Keep the independence in all of the companies and yourself to get this to work, right? What we do is we put the corporation in a fiscal year. What's a fiscal year? Somebody tell me. That's calendar year. Fiscal year is any cotton picking date you want to choose, and 12 months later, it ends. You can choose whenever you want to start, right? And in our company, we try to recommend to our clients you start on the first quarter. So you don't do January because that matches basically most LLCs. So you start either April or July or October. And then you end it 12 months later, right? And LLCs are a calendar year. Now, they can pay each other because they have contracts between each other to provide services for each other. So the LLC, come January, or come October, November, December, says it's making too much money. It receives an invoice, a formality from the corporation, pays the invoice. What happens to the money left over in the box? There's no money left. Who's in control? Who controls the corporation? You do, not the trust. You are the officers. The trust elects you to be the officers. You are control because you control the trust elects you. You now run the company, right? And if you're in control and you get the money from the LLC and it goes to the corporation, who gets to keep the money? You do. Now, come, let's say we started in July, come May or June, we go through the corporation that's making too much money. LLC sends it an invoice, sends it back, right? So now the corporation has no money left in the bottom of the box. Who's in control of the money? You are. Because you control both companies, but they are following formalities. They are independent and separate, just like you do. It's the independence and the separateness and the contracts and the paper and the formalities that make this work.
So can you not pay taxes by just
Well, and so what happens is, let's say you're a W-2 employee. This young man over here is a W-2 employee, right? And he goes to his LLC and he's got money in it, so because he does work by the corporation for the LLC, he sends an invoice from the corporation to the LLC, he removes the money, right? What else is in the LLC? Everything. Everything you own is in there. Your house, your cars, your furniture, your tools, your business equipment, your business furnishings are all in that LLC. Right? And now we'll talk here just in a minute about the two types of expenses.
Is that where your 9 kids are at too?
Actually, some of my 9 kids kind of like you guys, won't listen to me, right? But I do have 3 of them that have listened that are doing this, yes. Okay? And they're the only 3 that even own any other businesses. The rest of them work for somebody. I've actually got a son that works for the IRS, a trader. Right? So, there's only 2 types of expenses. Who can tell me what they are? Close, but no cigar. Okay, anything else? How about cash? No. Do you have to pay the credit card? I owe you. Cash, right? And non-cash. What is a non-cash expense? Depreciation, absolutely correct. So now, you've wiped out the bottom of the box. There's no cash profits. You've kept the cash, but you've legally moved it, right? So now the LLC is a pass-through, correct? What does it do with those expenses? What does it do with non-cash? It takes all your assets. Because you don't own them anymore, the LLC does. Let me ask you another question. Who can tell me what the definition of a capital asset is? Now, and this is talking from an accountant point of view. That's right. And why does it depreciate? What allows that capital asset to be depreciated? No, money. It's there in the business to make money. So if the asset is in the business and doesn't make money, it cannot be depreciated. Okay? But your house is now going to become a capital asset. Why? Because you are going to be a renter and your corporation is going to be a renter. So now instead of just renting or just depreciating a room in your house, you get to depreciate the whole house, 100%. And you're living in a fully furnished, all expenses paid home. So now the furniture becomes a capital asset, and your tools and everything else that you own in that house now become depreciable items. And the corporation's going to rent the cars. So you never again have to keep a mileage log, because whatever you write off on the car is no longer required and is no longer relevant for mileage, because now the corporation does not own a car for company expenses, for company reasons. It has a rental car, and you, as the main officers in the company, you and your spouse, are now allowed as a fringe benefit to drive a rented car, furnished by the corporation, where you don't have to pay taxes on it, and the corporation writes off the gas, the tires, the oil, the car washes, everything. Okay? So you don't have to even keep mileage anymore. It's irrelevant. So now you get to depreciate 100% of the house. You get to write off all the utilities. You get to write off all the insurance and taxes on the home and on the cars. And you get to depreciate all of the cars and all of the furniture. And now because of that, you take that depreciation, and if there's no money left in the bottom of the box, when you pull the plug, you push that depreciation value down the hole. You show that on your tax returns. You say to Uncle Sam, I've paid all these W-2 taxes. Give me my money back. Are you following? Is this just too much for you guys to? Yes. So that's one of the reasons why what we assign to everybody that comes on with is 2 people. A CSA, Corporate Strategic Advisor, to make sure you understand. I'm not going to just do it for you. We're going to teach you why we do it, what we do, and how we do it. Okay? And we're going to make sure you follow the formalities. Number 2, the person we're going to assign to you is a CFO. What's a CFO? Chief Financial Officer. That's correct. That's what I do. And I have 2 other people with me that are CFOs. Right now, I'm a CFO for about 80 companies. But I meet with the clients once every quarter, and we plan taxes. We plan it. We don't just, we're not like most accountants that are financial historians. We're going to plan it out so you know what your tax obligation is at the end of the year.
So, Ron, are you saying when you structure it like this, you can go back to any W-2 you've had?
No, you have to do it the year that you started the structure. I can't do this for last year, but I can do it for this year. Okay? Now, what are capital gains? Let's start talking about your real estate investments. Why are most people afraid of capital gains? What? They're a tax, right? Okay. You realize that capital gains are less expensive than paying taxes on ordinary. If you've got long-term capital gains, those are really minimal. They're only about 15%, right? But what if we could get rid of capital gains altogether, right? So the capital gains tax depends on it's on the sale of an asset, and it depends on how long you've owned it. Now, how about if we change something? How many here like flipping houses? Right? What if we take the houses that you're in and don't make them investments? What if we make them business inventory? Just like going out and selling Melaleuca or something. You buy the product, right? That's an inventory. You sell the product, you get a profit on it. It's the same way here. If you do this as an inventory for your flipping your houses, there is no capital gains, number 1. And number 2, it's ordinary income. It's just regular income. And why do you want ordinary income in business? What can ordinary income be reduced by? We've already talked about this. Expenses, right? So if you get a gain in here, instead of having to be stuck with passive income, instead of being stuck to where you have to pay that capital gains on the sale, now it's just ordinary income, and you get to reduce that ordinary income with ordinary expenses. And what are the ordinary expenses? And so let me make this caveat real quickly. Only LLCs should own real estate. And they need to be multi-member LLCs, either husband and wife and trust, or if you're single, just yourself and your trust. Taxed as a partnership. That's the only way this works. Okay? You cannot do this with an S-corp. But what happens at the end of the year if you pull the plug and there's no money left over? You get to write off the depreciation, right? So it's the same thing here. But if there's money left in the bottom of the box, and you've got this organization that I set you up with, how are you going to get rid of the money in the bottom of the box? Even if you sold the asset, you sold the thing, and you've made a profit, how are you going to get rid of the money in the box? You're going to put it into the corporation. You're going to pay it to them, right? As a legitimate cash expense. So even though you've got real estate and you've sold real estate, first thing you have to understand is there's no depreciation recapture on inventory. All there is a profit for what you've sold it over what it cost you. Right? Now, you don't get to depreciate inventory either. So let's talk about that for inventory. Here's what we want you to do if you're going to hold and own a house. So you buy for hold, not for flipping. Okay? We want you to do a limited liability company. I've called it real estate investment, but that's not what we want you to do. We want you to turn that property into a business. So when you organize the business, you do it for a business purpose other than real estate. You do it for management, you do it for marketing, you do it for sales, and you make money from another source. What's the other source you're going to make money from? Oh, went the wrong direction, okay? Either from the LLC or from the corporation, because you're all connected. And you get to move money around, and it's not paid to you, and it's not paid to each other for real estate purposes. You're doing it for marketing, you're doing it for sales, you're doing it for office managing, you're doing it for all sorts of other reasons. Therefore, you're making money for a purpose other than real estate. Okay? Your trust is the only owner of the corporation, but it's also one of the owners of both the family LLC and the investment LLC, right? And the corporation owns no assets. The only assets owned by the investment company is the investment property itself. You buy it, you hold it, you depreciate it. When you sell it, you have a profit, and the profit is the difference between your depreciated value and what you've sold it to. Therefore, there is depreciation recapture. But because it is normal income, it's not investment income, you can take that money and reduce it by the depreciation and by all of the other normal business expenses of that LLC that owns the company, right? And then if there's money left over, give it to the corporation and get rid of it.
How long do you have to hold it to claim depreciation?
You don't have to have any particular time. If you hold it, usually they say if you hold it over a year.
So
If you do flips and it's under a year, you can probably use it just as inventory. But if you're,
there's a way, if you're doing a flip, to get depreciation and profit,
yes, right.
even if you hold it under a year?
Yeah, if you want to hold it under a year and you want the depreciation, you don't want to use it as inventory. When you put it on your books, put it as an asset. Okay? Yes?
Over here, we're probably running up against time. If you
All
want
right.
to take maybe one more question and then.
Well, let's just talk about the difference between a contract for deed and the all-inclusive trust deed. We did that just a little bit ago. Okay, we're just about out of time. I'm sorry about that. So that was the end. So what I'm going to do is ask you, are we communicating? Do you understand? No. All right, I'm going to tell you a story. There's a lady, a few years younger than I am, about in her 50s or whatever, been married for several years, getting a divorce. So she made an appointment for a pretrial hearing to go and talk to the judge. Knocked on the door, judge invited her to come in. And he's working on his papers, so he just motioned for her to sit down, and he looked up at her and he said, all right, what's the grounds for the case? She says, oh, hit the wrong button. Well, we have a nice little home and 3 acres and a little stream that runs by it. He said, no, that's not what I mean. He says, what's the foundation for the matter? Well, it's made out of brick and mortar cement, just like any other foundation. And he said, no. Is there a grudge? No, we don't have a garage, thank you. We have a 2-car carport, but we don't have a garage. And he rolls his eyes and walks around over in front of the desk and sits down and said, okay, let's try this again. Does he beat you up? Oh, yes. He gets up at least twice a week earlier than I do. No, that's not what I mean. How about, has there been any infidelity? Well, yes. Both my son and daughter have hi-fi sets. We don't necessarily like the music, but to answer your question, yes. He throws up his arms and rocks around behind the desk and plops down and said, lady, why do you want the divorce? I don't want the divorce. I never have. My husband does. He seems to think he can't communicate with me. Thank you very much, everybody.
Thanks so much, Ron. If you guys have questions, Ron, do you have a few minutes?
Absolutely.